Hello everyone, it's 9:01 Eastern Time on Thursday, the 12th of October 2017. Thanks for joining me again. Bonjour, bon après-midi, or wherever you are. Depends on where you are. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance as we sit right now is on the risk-averse side. Money is moving into gold. Gold's up $5.40, up 0.42. The laggard today is crude, down 80 cents at $50.50, and the indices are all down somewhere between 0.1% and 0.2%, depending on the product. Japanese yen is flat. The only products that I see above settlement: U.S. Treasury bond, the Euro bond, the 10-year note, the U.S. dollar, and gold. Those are all safety instruments, and that's the way things are rolling this morning. The ES has shows that it's trading near the low of yesterday's range at 25.4850. With a slight gap down in range. There's no gap zone yet, not likely to be. And today we had, for those of you who don't know, it's earnings season again. You know, it's October, and we had a release this morning from Citigroup that was strong. $1.42 versus $1.30, 18.2 billion in revenue, 17.7 billion expected. Also, J.P. Morgan came in at 176 versus $1.67 expected, 26.3 came in revenue versus 25.7. Pay attention to those earnings. They're likely to drive some of the action here if the market would just please get back to trading the way it normally does. So that's where we stand. As far as what we're expecting for today, we did get the U.S. PPI core and initial claims this morning, and nothing much to talk about there. Let me see. I don't see those. Yeah, PPI, final demand, initial claims came in. So those are behind us. What's left in front of us is the natural gas release at 10:30 Eastern, and 11 o'clock we get crude oil inventories for those traders trading the CL. Remember, Monday was a holiday, and so it shifts to 11 o'clock today Eastern. We do have some central bankers speaking at 10:30. Fed Speaker Powell. We have ECB's Draghi for those who are trading the euro or euro products such as the Bund, euro stocks, and so on. And then we also get ECB Speaker Prate. So ECB Chair Draghi at 10:30, Powell, Brainard, and Prate, ECB Speaker Prate. Okay, so those are the key elements here. We also get some action out of the BOE. The Bank of England, Haldane speaks at 3:45 p.m. That's about 15 minutes before the close. And ECB Speaker Kerr at 4 Eastern, as well as Lautenschlager at 4:10 p.m. Eastern. So it's an ECB parade again like we saw last week. Let's take a look at what we expected yesterday and how things played out. So yesterday, we were opening right in the point of control, the MC point of control, right in the point of control of the prior day, in value and range. So the expectation is that the market's likely to go sideways in that, in that range, and then eventually pop higher. The expectation it would likely pop higher into the 25.53.50 measured move at some point, with the main move being upwards, as you see here. That's pretty much what happened yesterday. Let's go over Hypo 2, and I'll show you how Hypo 1 played out. So Hypo 2 shows that we had a pretty good test of new all-time highs that immediately got sold off, and then we consolidated in the middle in the point of control, and so the expectation was for a test early back to the point of control and potentially releasing to the downside, which did not happen. I wish it would. Here's what actually happened yesterday. Very tight trade, okay? Very tight trade. You can see here with a two-tick Renko, we're not taking up much of the screen at this bar pixel width. Pretty it just continues to be a pretty tight market, especially for this time of year. We would expect some range release. Here's what happened yesterday. We tested, stuck in the point of control a lot of the morning, and then we started to drift up, and we finally got to 25.53 and a half, right? Just as expected. This is exactly what we were looking for on our plan. Played out exactly as expected. Okay? Oops. Played out exactly as expected. We don't see that often these days, but scenario one, and I'll start calling them scenarios, not plans, not hypos. This was suggested by a friend who's in our chat room, and I think it's the perfect word for it, because it leaves us open for anything that can happen, and that's really what we're after here. We're after creating scenarios that could potentially unfold, but we're open to whatever comes next. So that's what we had yesterday. We finished near highs. Now, the distinct things you need to pay attention to, in my opinion, is we do have a double distribution profile, okay, with a point of control that's very sharp at the high. There was a lot of trading that occurred at the high there in the overnight session, and it left us with a strong probability of new highs in the Globex session. The point of control being as sharp as it was, given that we only traded there on the close, is telling us that a whole lot of trading had occurred at the close. A lot of it's buying. You can see here in the delta, shifting the point of control from here to here with such formidable such formidable strength. Actually was shifted from here. The difference between these volumes is quite tremendous. Okay. And so if you look at how this played out right here, you could see that quite a bit went off right at the close here. A lot of demand. What this market's showing is a lot of demand, and that could be sellers. That could be sellers who are covering as they see the market approaching new all-time highs, and it could be just sellers a tick above, or buyers a tick above the prior all-time high, those who are swinging short after an all-time high. But there's a lot that happened there. The way this is configured, it's telling us that we're likely to push this high again, and we expect that to happen overnight. However, the overnight session just drifted. Pretty poor showing here. The overnight session ended up having a high of 25.53 right behind that point of control. Just could not move any further. So here's the close, and a lot of volume that happened on the close here. You can see the delta just pushing higher, and then from there we opened right back up, and we just drifted down and started to shift down throughout the session. As we moved in sympathy with the European markets, which are lower this morning to just under unchanged. The Euro Stocks 50 are down 8 points, or 0.22% this morning. But the market just drifted down. The buyers just let go in the overnight session. The volume is 117,000, which is what we would consider normal to light normal, and the profile in the overnight session is boxy. There's no consensus here. The market's trading through the entire range thoroughly, with the delta being down, and price being down. The overnight inventory is 100% on the short side. It appears almost all trading has occurred on the short side of of the close. Okay, so we expect a little bit of a rebalance here in the morning, given that the delta is quite high for an overnight session, uh, being as it is about negative 7,500. And so this is very strange, right? This is an incredibly strange thing to see at all-time highs. All-time highs are either rejected and the market shifts down. So as the price goes up, there's less and less participation, less and less volume. It almost parabolically drops off to show us an excess. Or what we have is a little nubbin at the top, little shelf at the top, and then the market drops down, and then we have value underneath, and we end up with a profile that has a small weak high distribution. But to have a profile that is really sharp like we had yesterday, like this, is very unusual. I don't know what to make of that. But I know that there was a lot of participation at that high. Also, you may note that yesterday's volume was very low. The volume is unusually low. Remember, the average the volume here is 679,000 contracts on the day session yesterday. It was not a holiday. We expect around 1.1 million contracts, so we're almost at 50% or 60% of the normal or the most common volume. Just overall, very poor participation yesterday. Yesterday's move up was basically a drift. Up rather than the market really hustling to get up there. What have we done for the week? The week continues to one time frame up. If we split this profile, we have a low on Monday, higher low on Tuesday, higher low on Wednesday. We continue to drift up. We are back in the weekly one time framing higher. It's just an endless and relentless move up, and it continues. There's nothing that has changed here that would cause me to believe that that the market's changing its temperament. Again, I keep my this scale on this chart to 60 points, right? It's set to instrument 60. And what I'm noticing is that there's less and less room being taken vertically by this chart. It's just troubling. It's just there's not much range to play with here. Look at how tight that is. I have to keep stretching that out just to see what's going on in there. But this morning, the expectation is an open auction. Again, we're opening in range in value. The auction is, I'm expecting an open auction. Again, an open auction is, you hear it every day because we are still in balance. And so if I extend, let's do this in a bigger chart. Let's roll this backwards. So if I extend this profile and incorporate what's happened over the last couple of days, here we go. The black line is the most traded price. That's basically what we touched yesterday. We didn't touch it. We stopped the tick before it. That's the MC point of control. Shifting up, given yesterday's action, it shifted up slightly, but overall, we're trading right on it. Here's where we are right now, 25.4850. The point of control is 25.49. I expect that the market is likely to have an open auction. I'm looking for the market to try to continue lower and then to rebalance the overnight inventory and then to start trading upwards, but mostly sideways. I expect the market to break the low of yesterday but hold the high into yesterday into today's session. So that's the primary hypothesis. I'm looking for the market to consolidate again, and then eventually tomorrow it's likely to push up. And so overall, not expecting very much action. If we rebalance early, open auction, push to the high, I expect us to pull back and then break out. But I do expect us to finish back in line on scenario number 2. Okay, scenario number 3 brings the best opportunity, an open auction that breaks higher fails with an impulse down. So for this trade, I'm looking for a strong move down, 5.5, 6 points downwards that pulls back to the mid and opening swing, VWAP, continuation lower, take out Tuesday's low and start creating a cascade of stops or liquidations on the week longs. So we'd have long liquidations here that start to push us down back into 25.35 and a quarter, towards 25.35 and a quarter. I don't expect much range. Today's range on scenario 1 is probably going to be somewhere between 7 and 9 points. On scenario 2, potentially 10 to 11 points. Scenario 3 can give us 15 to 16 points with a move from 25.50 down to 25.35. That would be the better opportunity. Okay. Anyway, my time is up. I didn't want to take a moment to talk about failure, but I'm out of time. I'll save it for tomorrow morning. There's probably not going to be much going on. I just want to remind everyone what failure really means and how important it is to your trading that you do allow yourself to fail. Good luck, and I'll catch you tomorrow morning. Take care.